Hello and welcome to Morningstar. I'm Emma Wall and I'm joined today by Jeremy Podger, manager of Fidelity Global Special Situations Fund, to give his 3 stock picks. Hi Jeremy.
Hello.
So what's the first stock today?
Well, the first stock is Delhaize. This is a corporate change situation. I could equally easily have given you Ahold. These are 2 European-based food retail companies. Delhaize based in Belgium, Ahold in the Netherlands. They're coming together in a merger, and this will realise some very profound synergies. Ahold, for example, has fantastic buying power in the Netherlands, so this can be translated across their European operations. But they will have very substantial complementary operations in the US as well. And I think if they realise just half of the synergies that they are aiming for in this deal, that can potentially raise the earnings base of the combined company by about 20% over the next 3 years.
I mean, food retailers in the UK have not done very well over the last, 5 years. In particular, Tesco with its accounting scandal, and indeed the big names being undercut by the discounters. I mean, what's the market in Europe like?
Well, you're starting from really a very, very different base. The Europeans have been living with the hard discounters for a lot longer than the UK has. They have naturally a lower margin level than the UK food retailers used to have. So I think the dynamic of the market is very, very different. These are 2 very conservative, traditionally conservative players. But that's also not to take away from what they've done in the States, where they've seen decent margin progression, and I think this combination could lead to something even better.
And what's the second stock today?
Well, the second stock, which falls in the exceptional value category, is actually one from Japan, and we found a lot of value type of stocks in Japan over the past 3 to 4 years. This one's Yamaha Motor. It may be known to most people as producers of motorcycles, but the bedrock for the company actually is outboard motors for boats, and here they enjoy a very, very strong position. They have fantastic margins, and the value opportunity, if you like, in Yamaha is in the motorcycle business, where they have depressed demand in developed markets currently and depressed margins in emerging markets. For example, Indonesia, which is particularly important. So as things stand, I mean, the stock, having performed actually quite poorly over the past 3 months or so, trades on a forecast P multiple, which is about half of the Japanese multiple. Japanese multiple itself is now currently depressed against the rest of the world.
So it looks good for long-term growth?
Certainly there's the opportunity as they increase those margins in motorbikes.
And what's the third and final stock?
Well, the third one is in fact our largest holding within that unique business category, and this is Alphabet, or Google as most people know it.
A bit controversial because it's done so well for so long. A lot of people would say it looks a bit toppy.
Well, I think actually the market was waiting for a sign that Google, all the investment that Google has been making in all the new ventures, I mean, it is a tremendously innovative company. And the market has been waiting for some indication that they can actually rebuild margins in their core business and that the growth is on track. We had a new senior executive in place to try and address the financial issues middle of last year. The stock responded positively to that. And the most recent results that we've seen have seen actually acceleration in the core business. Really amazing growth, that core business being the search-based revenues. Amazing growth in YouTube and YouTube watching. This is a totally new form of media. And also great growth in Android-based revenues as well, because they run the Android system, mobile system. And that's not to mention all the options that they have in the various other areas that they are investing in now.
So still further to go?
It's on a not a sky-high multiple for a growth rate, a revenue growth rate that should be in at least in the high teens for the next few years.
Jeremy, thank you very much.
Thank you.
This is Emma Wall for Morningstar. Thank you for watching.